Hi traders, and welcome to my video on the Zig Zag Indicator, where I'm going to show you how you can catch moves like this one for around 300 pips and this one for over 500 pips. So here I have a pound dollar 1 hour chart. This is the MT4 trading platform. I've downloaded the Zig Zag Indicator for free online and added it to the platform. Perhaps you already have the indicator within your charting software. If not, you can probably find the Zig Zag Indicator for free somewhere online. Basically, the indicator is showing you dynamic support and resistance levels. In this video, I'm going to show you how I interpret it and how I use it in my trading, not necessarily how everybody else would. This is what I find works. As I'm going to show you now, you can catch some big trends with this indicator. Just make sure that you have good money management in place. You can use this indicator on any trading instrument, Forex, crypto, stocks, commodities, indices, etc., and any chart time frame. I personally prefer the 1 hour charts and above, simply because they contain more price data and therefore indicators tend to be more reliable, in my opinion. So yeah, now let's get into it. How to use the Zig Zag Indicator, right? So what it's doing is basically showing you support and resistance levels. I'll be honest with you, you can mark these off yourself. I mean, if this was the market we were looking at here, I would be marking resistance there. You know, perhaps like this. That's how I'd be marking resistance, and support like so. It's actually a wedge pattern there. Triple top chart formation as well here. The resistance been tested at least 3 times. We can see that price is starting to make lower highs, so we can expect a drop soon. And if you notice, where I've just drawn those support and resistance levels is almost the exact place where the zigzag indicator is. So that's what this indicator is doing. It's showing you support and resistance levels, okay? And you can either draw them yourself or you can use the indicator as a base. Some traders wouldn't even have any extra lines on the chart. You could just use the zigzag indicator itself, like so. Okay, so that's well and good. It's drawn us support and resistance levels. What do we do with them? Well, that's very simple. We trade breakouts, okay? So I'm going to mark the resistance there. And in fact, I'm going to mark support here, just because I can see a triple top candlestick pattern, which means the resistance, as I said, has been hit 3 times. 1, 2, 3. The neckline, basically the baseline of the support within the triple top, which is here. Support, 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 support. And as you can see, the breakout is significant, because probably a lot of traders were watching this particular support level. That would have been a good time to enter on the breakout there. We also have these 2 patterns. These 2 candles with the same highs and followed by bearish candle, suggesting that's a 3 inside down pattern there as well. So that's a good bearish signal. Obviously you have the trend is going down. You don't need any magical indicators to tell you this. You can use your eyes, look at the charts and see that's what's happening. Back to the zigzag indicator, I've drawn my support level there. If you want to take it as gospel, you can also use the point. You basically use the previous point, low point of the zigzag indicator, okay? Which is there. As you can see, that would have been a good time to, the zigzag indicator would have also been an indication to enter on this breakout here. So that's for me the way I would use the zigzag indicator, is just as a guide for support and resistance levels. Had we taken that particular trade, you know, if price was around here and you wouldn't be at your charts, you're going to bed, you're going out, whatever, you could have always placed a pending order below this level as well. So it would have been triggered. You wouldn't actually need to be at your chart. I'd put the stop loss up around this recent high here, so around 25 pips. You can also place it just above the support level. So once we have the breakout, if it's a fake out and price turns around, we don't just, we cut our losing trade short basically and look to catch these big moves. So when the breakout happens, price moves over 300 pips. With a relatively tight 20 pip stop loss, we had plenty of opportunity to make some nice pips on the way down this downtrend here. As price falls, there was a pullback and then price continued down, so we would have moved our stop loss probably above this recent high. As price continued to fall, wait for the pullback here. Price continues to fall, stop loss again, we move to there. Pullback, price goes down, move the stop loss again. So we're just basically trailing as far down as we can. This area here, price falls, this area here. Basically in the trail and try to maximize each good move that we catch. You can close part of the position on the way down just to bank some profits and allow the rest to run. What you don't want to do is get excited here and exit for 20 pips. That's well and good, but if you've got a 20 stop loss and a 20 pip take profit, it's not the best risk to reward ratio in the world. If you had a 3-to-1 risk to reward ratio, it's only going to be, you need 3 losing trades to cancel out a winner. But in saying that, I don't really like to use such rigid levels. I just go with what the market's telling me, because if you always use the 3-to-1 risk to reward ratio and you had this trade with a 20 pip stop loss and you exited here, well, you've done your 3-to-1 risk reward, fantastic, but you've also missed out on all of this. Okay. That being said, I'd always lock the trade in at break even as soon as possible. As I said, close part of the position on the way down. And if you do panic, you do get out early, or you've just missed this initial opportunity, the Zig Zag Indicator can help you time another entry. So we've missed this. Let's just say we missed this breakout. Okay, then we wait for the pullback to around here, and you can see the zigzags kindly given us a nice point of recent support, which we can use to trade another breakout. Some may argue this is actually a better trade. Well, it's maybe not in terms of pips, but in terms of we actually waited for the trend to form. So because here there was a nice breakout, but price could have easily continued upwards, could have ranged more. Some traders would actually happily wait for that to occur and then look to get in on this pullback here. When we have the pullback again, the zigzag, mark our support level and trade the breakout of that. Same principle, stop loss can be up here somewhere or just the other side of the support once it's breached, and still that's a good trade with over 200 pips profit potential. Again, if price was here, there's lots of bearish candlestick patterns there, by the way, another indication that would have been a good time to enter. I may have used the candle bodies rather than the wicks for the support here and perhaps look to get in slightly earlier, but if you just want the zigzag indicator to guide you, you can. So as you can see, that is a good trade there. But the zigzag indicator is not always the best when it comes to drawing support. As you can see, if we did here and we entered on the breakout, you should be avoiding that anyway based on that big candle there. I think that's a first Friday of the month NFP candle, but so I would have avoided the trade based on that anyway. Or you could be drawing your support at an angle. Okay, you can see this almost wedge-like pattern here, forming consolidation and a breakout down there. But by now, we've already seen this move here, so we would ideally want to get in, earlier on this particular move. Okay, so whilst the zigzag indicator can be used blindly as is, it is a nice idea to just keep an eye on candlestick patterns, price action, and they'll help filter your trades to avoid, selling too low or buying too high. Come to this example here, just move that line off the chart, that one too. Okay, so we've got the zigzag again, same principle. Okay, we have our resistance level here. That's the peak of the chart. You see the peak of the zigzag there, and then the support level down here. Okay. So we're going to wait for a breakout of the resistance or zigzag level, if you like, and that happened nicely there. In fact, that resistance, became almost a level of support. Just move that up slightly. Come almost a level of support, which shows that it's a strong level. Had we entered on that breakout of the zigzag tops there, we'd have a trade potential of over 300 pips again, which is similar to this sell trend that came after. As price continued upwards, we could have been moving our stop loss below the lows, just locking in some nice profit along the way. And then once we've seen all this consolidation, this resistance tested numerous times, it would have been a good time to look to exit around here somewhere if you hadn't already been taken out via a trailing stop prior to that. Again, the zigzag can be used for re-entering. So we've got zigzag top there and there. Okay, once the price breaks out, let's just move it back onto the level. Once price breaks out, this resistance level then becomes support. So you can enter on the breakout or the pullback, as confirmed by the two zigzag tops there. This level of resistance became a good level of support there and there. In fact, you might want to keep that on your charts to trade this breakout later. But yeah, again, the zigzag helped us re-enter into this trend. Well, I say re-enter, that's if you didn't initially get in earlier, but if you wanted to watch the trade play out, the trend start forming, then the pullback, then you could have entered on this second breakout here. This is instances where I don't really like the zigzag indicator. I prefer to draw my own levels because I'd be drawing my support, my resistance, something like probably like this. I mean, it's going by the wicks, so for me that's like I'm not taking that as that particular point of resistance. I'm looking more at what's happening around here. Okay. That being said, this is real choppy price action anyway, so not ideal place to look for a trade. Although in saying that, we do have our trend line going upwards, and some may argue you don't always need to trade on a breakout of the resistance. You can trade on a pullback to support. Okay, and we do have, ample opportunity. We know this is a strong level. It was tested, it was breached, it held up. It's held up here, it's come back here. We have a nice upward trend. We have bullish price action. This hammer candlestick pattern here. We could have looked to enter on the pullback rather than the breakout. So there's really various different ways you can trade with the zigzag indicator, or just basically support and resistance levels. Yeah, so that's a few examples of buying using the zigzag indicator in an uptrend and selling using the zigzag indicator in a downtrend. You can still hop in late to this move if you want. Zigzag indicator there. I've actually used the candles nearby for to complete the resistance. It just takes a certain amount of time before the zigzag will actually draw a point, so it needs a certain amount of pullback before doing so. So you can also manually just use it as a base plot and then plot the rest, as I've done here. And then we've got this sort of wedge formation. A breakout of that would have got you in the trend. Probably one of the last tickets, if not this one. You know, a last ticket on the train just to get the last bit of juice out of this move here. Anyway, hopefully you've found this video useful and you've got some ideas of how you can implement the zigzag indicator within your trading strategy. Please like and subscribe. Thanks for watching, and I'll catch you on the next one.